Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Sanofi India, what lies ahead for the company, whether you should invest at these levels or not. So let's get started. First of all, a disclaimer that this is not a stock recommendation and people taking any position into any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about Son of India, here's a small request that kindly support me on Patreon, and once you do that, it will help me grow the channel, help you also ask me questions in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and a number of podcasts that I put up from time to time. And also, for detailed market or company talk, you can directly email me. Plus, if you pay $100, then you'll be able to get a 1 year membership by paying for 10 months, so that's a 25% discount. And also, if you cannot play through card, then you can directly email me, and probably in due course of time I'll start with something uh, else as a medium of transfer of money. Now about Sanofi India. Present in India since 1956, the company provides medical solutions across the board. So basically, they are not only providing medicines, but they are into supplements, they are into strengthening products, they are into home products that are used for health, or health products that are used at home. So provides a number of peer products in nutrition, consumer health, and child vaccination. Exports around the globe to 170 countries. So it's a pharma MNC company that rarely falls. A market leader in adult nutrition and pediatric nutritions. That's also pretty good. And market cap of around 20,000 crores is a solid company. It has a very, you can say, genuine track record with respect to the kind of business that they have and the management that they are working with. If you look at the financials of the company, then these are Q3 performance or December performance that I have put up here. So sales went down by around 7.5%, but profit jumped 70%, and that is after a lot of operational efficiency and lower expenses that they had to, and plus taxes also helped. Lower taxes also help the company shore up the bottom line. A debt-free company, high promoter and institutional holding, 16% free float, and even with the public shareholding that the people are having it, most of them have it for years and intend to hold for years. So those who buy these companies hold for 5, 6, 8, 10 years. Return on equity of 22% has been consistent around these 20 to 23, 24%. Operating profit margin of 26% is very strong when you consider the industry that it is working in. Now to the performance of the company. Stock has been consolidating for the past 1 year. It hasn't been something that has just put the stock markets on fire. The 52-week high has been 8,900, it's around 7,700, but it has been a consistent performer. And over a 5 year period, it has been an outperformer, and we have seen how the company has produced the numbers, and all numbers on the bottom line has remained strong, although sales have been up and down, but bottom line have increased, and dividend is also pretty good from the company. It's a prime portfolio kind of a stock for generation. So this is like a Nestle that you can probably buy, or an Asian Paints and a Pidilite that you can buy and probably hold for 8, 10, 15, 20 years, intend to hold, and probably it will generate you certain returns that would be much greater than probably a fixed deposit. The market cap has swelled to around 18,000 crores from virtually it was around 5, 6,000 crores about 4 or 5 years back. It has just gradually went up from those levels. It is trading at 60 times, which is slightly stretched, but you need to understand that being an MNC company into pharmaceutical with such strong numbers, it has to trade like you can say a consumer company, and that has what ended up being. And you have to understand that the company has been into products which are more consumer oriented, also health products. People are health conscious, and those health products for weight gains, for other kind of activity for women and men are being used pretty extensively, and that's why the company is trading at 55-60 times, because it is considered more or less like a consumer company, and the numbers may remain robust. So in this difficult economic situation also, the numbers are coming out to be pretty strong. Now coming to the technicals of the stock, there is strong long-term support around the 6800 levels, which is the 200 DMA around 6800 7000. So any dips towards 7200 7300 would be a very good buying opportunity. It really falls big, and I believe that if somebody wants to buy some stable companies where he's not worried about the volatility of the markets, etc., this is the stock to go for if somebody wants to invest 8, 10, 12 years into the market. It cannot be traded on a short term basis. It rarely moves on a 3 6 month basis, but after 2 3 results it moves big and then sits. So this is the kind of you can say movement the stock has, and the bigger up move is only expected above 8600 levels. So this can be bought for long term. Hold and keep track of global events and have a 5 year view. That is my perception. So this is my video on Sanofi. Please like and subscribe my video. Thanks a lot for watching.